Hello everyone. All right, so let's take a look at the market, see what's going on. What we want to do this here is see where the money is going. All right, so nat gas and crude have their highest relative strength. They're in uptrends. Crude making a 9-day higher high, and the weakness is in wheat and bean oil. And there's a lot of weakness in bonds. It's making I think it's a 408-day lower low. That is pretty damn bad. 408-day lower low, if I'm not mistaken. I don't know. That's pretty. The bonds are screwed. All right. Also, gold making a 19-day higher high. So we want to take a look at where the money's going and put ourselves in the way. So if you see the money going into nat gas and crude, and coming out of the bonds and whatever, just need to have an execution procedure to enter those markets. Now, here's also the thing. One of the steps in market selection is to identify markets that have the most amount of relative strength and relative weakness. So, when you're trading, it's a series of steps. Step one is market selection. So, how do you go about that? Some people, they will trade the same market every day, forever and ever. But what happens is those market contexts change. And you can have a very active market become a very dull market. And it's an old saying, never ever trade a dull market, or I think never short a dull market, something like that. So whatever your approach is, you should know where the money is going. And right now, it's in natural gas and crude is making 9-day higher highs, and the weakness is wheat, bean oil, and obviously the bonds. So. And this is how you select the market. It's based on relative strength, trend, and whether it's making higher highs and lower lows. That's pretty much it. So market selection, what factors? Looking at relative strength. Typically, if it has high relative strength, it's going to have a correlating trend. So if you have higher relative strength, it'll be an uptrend. If you have low relative strength, it'll be in a downtrend. And then you want to see the higher high and lower lows because that's objective price data. Can't really, it's not a measurement. It's making highs or making lows. Period. All right. So the other things we want to see is in terms of the sectors, how the index is doing in terms of these groups. We see that NQ is strong and the weakest is RTY. Energies is nat gas strong and this other one crude. And then gold, although gold is not, it doesn't show that much strength here. It's making 19-day higher highs. So in 19 days, the highs that are made very recently are the highest in 19 days. There's money coming in. All right. Now I don't know what's going on, and I'll check, but it's clearly it hasn't shown strength yet in terms of relative strength relative to the ES, but this is the other strength indicators, basically highs and lows. Markets making highs, strong, making lows, weak. All right, and the bonds 408-day lower lows. Can you believe it? And agriculture, bean oil, screwed. But the soybeans, although it's weak, it's making 14-day higher highs. This market must be looked at because it's weak, but it's making those highs. This is not a pullback. Pullback is like 3, 4, maybe even 5, but 14-day higher highs. So should see if there's a trend change there. And then currencies, again, Bitcoin has some relative strength. And that's about it. So now let's take a look at crude and all of that. So here's the thing. All right, let me just go through crude first. So on the crude daily chart, what am I doing? Yeah, I don't know. I can't even select. There you go. All right, so crude daily, you have high volume selling right here. So you had high volume selling right here. So that looked like a change of behavior, right? That has more than 2 times the average volume. It has 2.24 times the average volume on the selling wave. Pullbacks a week, etc., etc., right? Now, what's interesting is in that selling area, this zone, guess what? You have the market going right into that zone. So as it was coming down, here's where they accumulated. You see that 43? That 43 was like a selling climax. Whatever, you could just think of it as buying the low, all right? We're going down and then someone bought the low, and now it's taking it back up into that selling area. Now, here's the thing. As it came back into that selling area, let's take a look at the hourly. On the hourly, the selling came in. It did come in. All right, so when it tapped that area, sellers came and, they sold. And then it came and did an upthrust, but it's not enough selling. So we'll see if it intends to go higher or it's going to eventually break. I was expecting more. This selling, expected. Upthrust, expecting more selling to break, but it didn't. So it's getting really interesting to see if this market, there is a minor trend change, right? You see the red wave, but I don't see the volume confirming heavy selling. There's no heavy fucking selling, all right? Besides that, I don't really see anything else. I mean, they attempted to break out here, on that upthrust, but it was blocked by selling, and that selling actually on the tape reading chart has twice the amount of volume. So went up on this column of 30,000 contracts, came down in 68,000 contracts. So it's really getting interesting to see if they're going to break it or not. Anyway, I really don't care. I mean, my whole thing is, you have rally, pullback, and you can trade it. Right here, you had a rally, you had a pullback, right? So what happens after pullback, next rally? Is that what happened? Yes, it did. Boom. Done. You have a rally, you have the pullback, hits a high volume area. Now you go to lower time frame, volume is still there. They pick it up, and they give you another rally. You're done with the trade. Here you had a rally, but is this a pullback? No. Why? It's too much selling. And it takes out the low, so it's not a pullback. All right, let's move on to the ES. This market is getting me really interested, really interested for a big move, because as it was coming down, these dudes came and they bought it right here. That's 106 times 100,000 contracts. All right, 106 times 100,000 contracts. On the pullback is nothing. 40. 106 up, 40 down. All right. Now it attempts to rally and pull back again and goes into a potential spring position. In this potential spring position so far, nothing, no volume. Look at this. 23. 106 up, first pullback 40, second pullback only 23. If you get a green bar now, and it's staying here at this support, it is on the springboard. It is on the springboard. If you get a green bar, let's say for example tomorrow, it means that the selling has dried up. They're done with their 2-day selling. And it's a green bar, meaning buyers are stepping in. You have a shot at this market initiating markup. If that happens, big money, big move, big money. All right, so that's really important. And you can take a look at all of this, right? You see here there was high volume, that was your climax. Then you have high volume here that initiated the breakout, pullback. So I'm really liking this. But it all depends on whether this selling can stop and it can hold this area and buyers hold, defend, and come in to buy more to initiate the uptrend. Okay. All right, whatever. So you had the rally, pullback 1, pullback 2. Let's see, pullback 2 holds. If it holds, it's going to go into pullback position, ready for that move. All right, this was the original move right here. Meaning after the first pullback, where you have 106 on the up wave, 40 on the down wave, going into the support zone. From that support zone, you had hell a lot of buying volume, 4.7 times the average demand volume, and then it made a higher high. Very, very bullish. After that, market pulled back and they took out the damn low. So they took out the low, which was unexpected. However, as they took out the low, I don't see heavy selling. And they basically are, it's like springing the range, right? And that's exactly what you see going on in the daily. So this is setting something up. This is setting up. So it's like, what do you call it, at the danger point? So it is at the danger point that big decisions are made. It is at these edges that the decisions are made. And that's why I'm looking at this to figure out what the hell's going on. Is it going to break? It's not, blah, blah, blah. All right, so keep your eyes on the ES, its spring position, and right here, right now, whether it reverses, gets back above the prior low 3 days ago with demand. And look at the hourly to see if there's a change of behavior or if it just continues lower. If it continues lower, then yeah, I don't know. It could take out the low and all of that crap. But if you're looking for the turning point, you are at the decision area right here, right now. All right, take care. Bye.